Welcome to Mr. K's Connected podcast. This podcast series will help you understand the precious metals industry, the background, the future thereof, as well as the factors controlling its fluctuation, empowering you to build long-term wealth. Before we dive in, remember you can find the accompanying blog to this episode on our website at www.mrk.co.za. Mr. K, pure and precious metals. Now, let's begin. Good day, everyone, and welcome back. I hope you are looking forward to this week's episode because, wow, have prices escalated in recent weeks. To begin, there is no doubt that the effects of COVID-19 are being felt in different ways across the global financial and business markets. Supply-side constraints have resulted in bare shelves in major US retailers as transport and logistics delays frustrate consumers ready to spend as the world recovers from the pandemic. At the same time, rising oil prices is putting pressure on input costs everywhere, which we have spoken about before and continues to have an impact globally. There is therefore a unique combination of factors, largely post-COVID related, that has created an atmosphere of uncertainty. With the demand for goods and services rising as consumers become eager to spend again, the chase for delayed stock is raising prices across the board. With increased transportation costs come even more price hikes, and with logistics battling to keep up with the shortage of containers and truck drivers to transport goods, prices are up even further. It is within this context that inflationary expectations have risen. US inflation figures are now at a 3-decade high, and there are similar price rises across Europe and Asia as well. These conditions historically have favored investors in precious metals, and this last week has been no exception. Economists and financial observers have spent the last 6 months questioning just how serious the inflation threat is, with many arguing that it is merely temporary. However, there's now fears that inflation may well be with us for longer, and the threat to a broader economic recovery and currency valuations may be more serious. Both gold and silver prices have now reacted to these dynamics. Gold is flirting with prices above the $1,800 mark and has been teasing high levels. While the prices remain volatile, we continue to be on the lookout for further price breakouts. This will be an important foundation for the metal to sustain more positive returns for investors who will finally have been rewarded for continuing to hold gold in the past 11 months and even increase their exposure, especially following softer prices in the recent weeks. Also noteworthy is that gold prices have moved upwards alongside the rising US dollar, an unusual occurrence which indicates the seriousness of the concerns regarding inflationary pressure. Inflation eats into the value of hard currency holdings, and gold and silver have historically enabled investors to withstand these headwinds to secure their portfolio valuations in times of uncertainty. The multi-decade highs for inflation have spooked investors who are again returning to the relative safety of precious metals as a hedge against rising prices. With gold and silver largely being driven by inflationary fears, there still remains some concern that an early increase in the US interest rate can dampen the momentum of the metal's advance. However, the US Fed are now reluctant to advance rates too rapidly given the broader instability this can cause for both US and global economies. Assuming a more methodical and slower interest rate rise over time, there remains good potential for gold and silver to hold their gains and advance further into the new year. It is therefore a battle between inflation and interest rates that are both pushing gold higher and also pulling it back. Despite this, it is clear that investors are looking to hedge their portfolios against the damage that an extended bout of inflation can wreak upon the global economy. An interesting fact that I'd like to share with you, though: gold bullion sales have increased in Germany over the last month, as German investors digest their raising inflation figures. With the holiday season approaching, sales of jewelry are also likely to keep prices relatively healthy. Markets will be looking at broader US economic data over the next few weeks as the year draws to an end. The strength of the US dollar is also important, especially for South African investors facing a weaker rand-dollar exchange rate. Rising COVID numbers in Europe are also a reminder that the pandemic is still a possible dampener on economic growth. We are also mindful of the market reaction to the reappointment of Fed Chair Jerome Powell and the volatility that this has brought to metal prices. In the face of all these factors, both gold and silver have rewarded investors who have stayed the course, and their potential for more solid return remains on the upside. Let's see what the last bit of 2021 holds. Tune in to our next podcast in 2 weeks from now for an update and the start of the festive season. See you then. Please consider sharing this episode with anyone you think might benefit from the information therein. For more information on our bullion products, visit our online store, where you can find the full range of Krugerrands and bullion bars on offer. We also buy gold, silver, and diamonds with an easy and transparent process. I look forward to connecting with you again soon. Until next time, have a golden day.